The password to give you not a crypto, the Amazon. Looking at Amazon and the macro, what it does is it gives us an indication along with Google and all the other big companies as to what's happening with the market. So I'm going to just have a quick look at Amazon, and then the next video I'll probably Google, and then keep going with it, and then go back to crypto. What we're looking at here is a macro channel, and so far it seems to be lining up. So we've got our pivot points of reference all along the way. Bit of a fake out there, and we've got this, and it looks like when you look at it, it's pretty much in line as a channel, and so we think that it will stay in the channel for some time. So let's just put this line in there. Unfortunately, it's in black. Let's just change that. Let's have a look at this. So because it's a logarithmic chart, it's not going to really help us here. But what I do is I want to get this aligned well. So we can sort of do that. Okay. Give or take a bit. And what I want to do is next is get the middle. And that's in, okay, so there we go, the middle of the channel. What we can do now is just a technique of mine, split that into two. Give or take a bit, and let's see how it lines up. Almost there. So we might just see if there is variation in there that we can play with. So the middle, is the middle good? What fits the best in the middle? Yeah, I think that's a bit better. Fortunately, the chart doesn't stop playing around. Stop moving, you crap. That's what I want. Yep, it's almost there. Didn't quite touch it, but either way, you get the understanding of what was going on. What we had was here is a topping off structure, neckline, and this is the weekly chart. And let's just get rid of these. So the topping off structure, so head and shoulders, give or take, the target for that was roughly there, and it went further. And you can see how the retest off this middle line, so it did work out to be right. So it does bounce off that middle channel, and then up it goes. And then we apply Fibonacci to this, and you can see how the Elliott Wave tool is making the counts. So if this is a ABC correction, I don't think that's the case, but if we were to do this, you can see the rejection. We've got the 200 moving averages. I think these are on the weekly. Yep, they are on the weekly. They are acting as major resistance as we go down. What I do think from an Elliott Wave perspective, yeah, I do agree with that. 1, 2, 3, 4, 5. Yep. However, I do think that this is the A and the B and potentially a C. Let's have a look at that. Or actually, let's look on the free day. It might give us a better idea. So there was an ABC there. That was our A. That was our B. Stop it. B and C. Now this suggests that you can do a bigger ABC move. Very possible. However, looking at SP 500, looking at these moving averages, 0.382 as a resistance, 618, everything lines up perfectly with the Fibonacci, the way that currently we set it up. So if this was to be a bit more of a correction, then we need support here. So let's get rid of this Elliott Wave count. So it needs to find this as support, and that's where we can end up as resistance and then continue down. I don't think that's going to happen. I actually think that this is likely to failed, and this is going to be A, B, C type of thing, and then we get the double bottom. Maybe we might get that off the channel. Might even swing below it, but I do see this coming down. Similar to the SP500, we have this trend line that's probably going to keep it in place until we break that trend line. We're not going anywhere. So there we go. So we've got that structure. We had a strong move. What percentage is that? Okay, so interest rates are going to keep rising. What the Fed's going to do is likely to make it come down to this level, and that might take a week or two, or actually a few years. A few months. So with the sentiments in the market, with inflation, I do feel like this is going to just come down here. And would that take, so how many weeks did it take there? It's taken, let's have a count. Date from there to there is taken 35 days. That's a month. And in this case here, it's taken a fair bit, 130 days. So okay, that's took a fair bit of months. So if we were to look at, if the Fed was to take 2 months, yeah, that sort of fits in, 2 months to come down to that level. Yeah. So that sort of lines up with a bottom, and we might get a bounce, but I don't expect much, and it could just do that. We could have a really bad time in the coming months and probably this year. The bottom of the channel is probably where we're probably going to head to, but so if I'm looking at that correctly, that makes sense because other previous times we had a bad bear market and the 200, once we lost the 200, it did drop a fair bit. We have lost the 200 and we are likely to drop a fair bit. Now, is this the bottom where the 618 there, with the way I've set it up, the negative 618? It's very possible, and then back up. If we look at this, but if it's really bad, then guys, this is going to go really down. But at the moment, I don't think that's going to happen. What we know is that the Fed is going to increase their rates for a few months, and it might be just enough to bring it down to here or to that middle channel. Worst case scenario is to the 618 there, but I don't think that's going to happen. The bottom of the channel is probably likely the most. So we've got this scenario. I do feel like it's going to come down more. We might get the double bottom, and if we don't break that level, if we don't break it, we can still do that. If we don't break this level, that level there, we're going to come back down, and then we'll probably go there. So I'm not going to try to guess what it's going to do, but I do feel like for the short term, this is coming down with a W, very similar to SP500, and then we'll see what takes place when it gets back to here. And that's all I got. So please give me a like and share. I think this is the first one I did on Amazon, and I just want to track it later on to see how my TA works. Anyway, talk to you soon. Cheers.